Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, January 5th, 2017. Yeah, today looked like it had a little bit of opportunity to have some excitement, but when the bell sounded, we pretty much ended right where we started. So, yesterday I'd said that these bearish divergences on the short term charts, the 15, was hinting that we were going to get a pullback. Maybe it still goes lower than this. Like I said, it would make more sense if it went lower before higher because that would complete this ABC pattern. Maybe they're forming, a whole bunch of ABC patterns on the way down. Tough to say. Right now, we just know that there's every time we get a dip, there's a lot of buyers. This was the biggest dip we had, and you can see once we started the new year, they started gapping things up. Today was the first day that they didn't gap it up in 2017. So we know the line in the sand for the Bulls. They got to defend the 2273. The Bears need to push it through the 2260. If they get above this 2270, obviously the next move is going to be up to the 2277. If the Bears push it through to 2260, you can see they have some support right around that 2256 and the 2258, which is our 57, which is the moving average, and also this gap right here. So if they push it through this, we could get a pretty quick panic trade down to the 2245, and then again we have this open gap here. If it heads higher, again, I'm not really interested on the long side for this one reason that if we get above these levels here, we're going to have the bearish divergences on the daily charts, and it's one of the things that they could extend longer. Don't get me wrong. I'm not saying that once we get a bearish divergence on the daily chart that we have to turn right around, but it opens the door for usually what it means is that there's going to be more points to the downside than the upside. And even though it doesn't mean that it has to head down right away, we can get these types of patterns where we just kind of chop around. And same thing here, where if you bought the divergence here, you're getting a little bit of new highs, came down, got another new high, but the bigger point move was to the downside. So I'm not trying to get overly bearish right now because they could push us higher for the remainder of January, but I think it's going to get very choppy. And like I said, for me, what I would be looking for is if they came back down and at least tested these lows or closed this gap and held support, that then you know what I would say that's probably the low. We made the low, we came down, tested it, we found buyers, and now we're going to head back up again. But really, until then, if they decide to just head higher from here, I'm gonna watch it. I don't need to be in, especially when we have the technicals that are telling me not to join the party from this level. And I'll just wait patiently for for my move to the downside. And again, if it comes down, then I'm going to be looking to buy. So that's really all I have. We ended the day pretty much where we started. We got the pullback that I was anticipating we were going to get. It just found support and ended the day right back where we started. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.